everyone, I'm back with a new topic. Wait, where were we? Yes, the chart patterns. There are 4 types of chart patterns: the double top and double bottom, the cup and handle, the head and shoulder, and the last is triangle. So let's go deeper into it. Let's begin with a reversal term. A previous trend changing into a new trend. Generally speaking, any trend in double top and double bottom are reversal pattern. Double top can be seen as an M and double bottom can be seen as a W. Double top converts uptrend into downtrends, a bearish reversal, and double bottom converts downtrend into uptrend, a bullish reversal. Double top. In the double top chart pattern, there are 2 peaks forming an M, and here the first peak forms and travels down, forming the new peak. The first peak is the highest peak of the current trend. Here, price is at the second peak and touches the neckline while going down. Second peak declines the current trend and continues to move down. When the price breaks the neckline, the distance between the second peak to the neckline is the same as the distance down the neckline. The first and the second peak are at the same line, which forms a strong resistance level. Double bottom. There in the double bottom pattern, W is formed with the help of 2 peaks. At first, the first peak is formed which walks down, generating the second peak. Here also the highest of the current trend is the second peak. Second peak travels upward because of rejecting the current trend. When the neckline is cracked by the price, the distance between the neckline to the second peak is much likely of the price moving down the neckline. Here, a strong support level is formed because the first and the second peak are on the same line. You all must wanna know the meaning of neckline. The low points of each peak are ruled in a straight line which forms a neckline. The head and shoulder is the most reliable pattern which helps the traders to identify the reversal. This pattern has 3 peaks. The middle peak is the head because it's the highest peak, and the additional 2 side peaks are the left and right shoulders because they are low as compared to the head. In head and shoulder top reversal pattern, the uptrend gets converted into a downtrend. Here, the left shoulder's end point and head's starting point brings about strong support points on the neckline at B and C. It could also be called a support trend line. The right peak's declining line breaks the neckline and moves down to the volume. The head and shoulder pattern is accurate when there is a neckline break. The left shoulder is formed at the end where the volume is generally heavy. For identifying the target, the distance of the shoulder when crosses the neckline is the same as the head. Sometimes the left and right shoulder are slightly different in head and shoulder. Bottom reversal. The situation is totally different as the downtrend gets converted into the uptrend. The strong resistance points are formed because of the left shoulder's end point, and the heads start at the points B and C. We can call it a support trend line. The right peak has a declining line that breaks the neckline and proceeds to move upwards. You can identify the target easily as the distance below the neckline, KS, the same as the head. For note, when there is a neckline break, the volume increases in both top and bottom reversal. It's the basic chart pattern in the form of fusion, so it could be seen in the middle of the trend. It basically signals a continuous process of existing trend. The triangle pattern has 3 main types that are used frequently. Not all triangle patterns are the same, so it's important to learn each triangle theory. It's formed by intersecting 2 trend lines as the price moves in sideways. The first triangle we're going to learn is symmetrical triangle. It's a composition of the diagonal falling upper trend line and rising of the lower trend line. diagonal joining of two lines at the corners. The upper and lower trend lines meet at a point, forming a symmetrical triangle. As the price moves to the join point, it will automatically be a fall for the upper trend line on the price rising and lower trend line for price falling. Currently, the second triangle is the ascending triangle. An ascending triangle pattern is a breakout pattern that forms when the price travels out of the flat upper trend line with a rise in volume. The upper trend line could also be called a resistance trend line. It's a bullish formation. The upper trend line must be horizontally straight, which shows the same higher lows, and the lower trend line is rising diagonally, which indicates lows going higher. Here, the buyers are particularly stepping up. In the end, they lost patience and rushed into the security level, crossing the resistance line, which results in more buying. After it, the flat trend line, which was initially a resistance line, now becomes the support trend line. The last type of triangle we're going to learn is the descending triangle. It's the opposite version of the ascending triangle. It's considered as a breakdown pattern. In this, the lower trend line must be horizontally flat. The lows are equal and highs are sloping diagonally down towards the joining point, that is apex. There is a reason to call it breakdown because the price collapses on the lower flat line, which is also a support trend line. Now the lower trend line, which was initially a support trend line, becomes the resistance trend line because the price moves downward. The last pattern is the cup and handle. The cup and handle pattern forms a shape as U as the cup and V as the handle. Simple. Not that. Let's dig more. It's considered to be a bullish signal and especially used to identify buying options. As mentioned earlier, the shape of the cup should be rounded, yet if there is a shape like V, the deeper one, I advise you to avoid it immediately. The cup shows the signs of the bottom as it has bounced back from the lows and goes higher towards the resistance level. The handle is a tight merger formed under resistance, a tip. The best cup and handle has the shallow retracement on the handle. After the high points are formed on the right side of the cup, there is a pullback that forms the handle. The whole handle is 1/3 of the cup. It extends an uptrend and is used to detect alternatives to go longer. The maximum time in which it can be held in 6 months, rarely any longer. It takes a longer period of time to form, and only if you have a high patience level.